Hello friends, welcome to the Groww YouTube platform. My name is Chintan Haria and I am the Head of Product Development and Strategy at ICICI Prudential Asset Management Company. Today we are going to be talking about a few things. Mainly this call is to explain what is the ICICI Prudential Small Cap Index Fund NF all about. But that is a discussion which I would like to intertwine with what's happening in the markets to make it probably more relevant to all the listeners. Being strong because of liquidity and obviously the interest rates being low globally, India is getting a disproportionate benefit, and India has been one of the best performing markets as well. So while investors may obviously keep a cautious eye on the risks through their asset allocation, and we are very big proponents of the fact that you should have your asset allocation in place. What does asset allocation mean? It means that you are supposed to basically see your overall allocation towards equity, debt, gold, etc. And if you cannot know your own risk profile, probably an advisor or a platform can help you decide what is the right allocation for you based on your own responsibilities, your own income, etc. Within the investment space, we believe that Indians in general are underinvested in equities. That is changing. We are seeing the number of demat account openings increase over the last 12 to 18 months. And the equity culture is definitely coming back into India, which is a good sign for the long term. But it is also important to be systematic about the long-term investments, and patience is the very big key that we all should have. So while the market is good, everyone is getting invested in equities, it is good. But you should keep your asset allocation in place and know that equities is meant for the long term. It's not meant to make money in 6 months, 12 months, and probably move away from it. With that background, as an investor, you have many options, right? There are so many options that are there. There are active funds where the fund manager buys and sells on your behalf within the mutual fund space. And there are passive funds. Passive funds in general have been growing in terms of their popularity over the last 3 to 4 years because of their low cost nature and also their transparency in terms of the methodology. What do I mean by that? Passive funds probably are basically those funds which track an index. So you know what is the index, what are the constituents, and what are the weightages, and you exactly know what you will get. For example, let's say the Nifty index fund or the Sensex index fund. Here you will know that you are investing in large cap oriented 50 companies within the Nifty 50 or large cap oriented 30 companies within the Sensex 30. So it is passive investing. It is called passive investing, wherein you put your money in these index funds and they will be tracking the market. These are broad barometers, for barometers of long-term growth in India in general. Then there are mid-cap index funds as well. And if you look at it, there will be a small cap index fund, which we are very happy to launch, right? In terms of risk reward, if you look at it, large caps being stable businesses and having strong balance sheets generally have lower volatility, followed by mid caps and then small caps. So small caps are those companies. What is the definition of large cap, mid cap, small cap as we speak? Typically, large cap, as it is known in India, are the top 100 companies. That is the first largest market cap to 100th market cap. Mid cap is 101st market cap to 250th market cap. And small cap is 251st market cap to 500 market cap. So it is very important to have the right mix between large cap, mid cap, small cap in your overall portfolio. Because as you would know, the large caps of today, maybe 10 years, 20 years back, were the mid and small caps. So in the corporate life as such, there are companies which start small. They keep on becoming bigger because of good management, good balance sheet, and good growth. A small cap company will graduate towards mid cap. A mid cap company will graduate towards large cap. In this journey, right, you do not know which company can become the mid cap, which small cap company will become mid cap, and then eventually large cap. And hence, the ICICI Prudential Small Cap Index Fund is a good way to participate in the 250 companies within the small cap space as a passive investment. So you get the advantage of participating in all the companies through the index fund route. And because we cannot exactly predict which company is going to become the next mid cap or the large cap, right? You get a basket approach wherein you are basically participating in the entire 250 companies through the ICICI Prudential Small Cap Index Fund. So the new fund offer is going to start soon. And we believe that it's something which, for those investors who have risk-taking ability and their overall allocation allows them to participate in small cap, they can do so through systematic investments. By nature, small caps are volatile. They basically move up very sharply at times when markets are doing badly and the economy is going through a bad time. They also correct very sharply. In the long run, if we look at 5 years, 10 years, 15 years, if you have a systematic, disciplined approach towards investing in the small cap universe, you ultimately add value to your overall portfolio as well. So we believe that the ICICI Prudential Small Cap Index Fund is a good fit for your systematic investments into the small cap space. You're getting the advantage of the entire 250 companies being part of your bouquet in one go in a single fund. And if you look at the contours of the fund, it is very well diversified. I think the largest sector there is financial sector, which is about 16 to 17%. So there is no concentration of sectors. All the sectors are well represented there. Also, the largest stock in terms of its exposure is, I think, 2 or 2.2, 2.3%. So it's also a well diversified portfolio in terms of the stocks that it has. There is no concentration of stocks as of now. So you're getting a good diversification in stocks and in sectors. We are going to see inflation coming back because of the easy liquidity leading to prices getting higher. And if inflation is going to come back, it generally impacts the equity markets in a positive way, which we're already seeing. And hence, while we cannot predict which of the small caps will exactly do well, as a basket approach via the ICICI Prudential Small Cap Index Fund, you can systematically participate. Being an index fund, you do not need a demat account to participate in it. You can pretty much participate in it on the digital medium, etc. as well easily without having a demat or a trading account. And it being an index fund, you can easily do systematic investment plans also as part of your overall allocation. So thank you for your patient listening and goodbye. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.